Hello, and thank you for tuning into the channel. Today, we'll look at the top 10 stocks to buy now that cryptocurrency is down. Before you begin, be sure to like us on Facebook and subscribe to our YouTube channel for more future updates. Number 10, Alphabet Inc. GOOGL. Being a top-tier large-cap growth stock, trades at a price-earnings ratio of slightly under 29, which is nearly comparable to the larger S&P 500 index. Analysts predict GOOGL earnings to grow at a rate of 24% each year over the next 5 years, compared to 15% for Apple Incorporated, the tech industry's belle of the ball, which trades at 31 times earnings. Alphabet's primary business of internet advertising is still booming. YouTube revenue is up more than 43% in the most recent quarter, and the Google Cloud business is growing, although cloud operations aren't profitable despite $4.99 billion in revenue last quarter, which was up 45% year over year. Alphabet reported a $644 million operating loss. Margins are increasing, and a return to profitability would be a huge win for investors. Number 9, The Trade Desk, Incorporated. New investors may think the trade desk is costly, but the latest Nasdaq downturn has cut the advertisement company by around 62.9% from its all-time high last year. The decline appears to be more of a general market correction than anything related to the trade desk particularly. As a result, today's price appears to be a once-in-a-lifetime opportunity to join a firm that has the ability to completely disrupt the advertising industry. According to Yahoo Finance, the company operates a self-service cloud-based platform that allows buyers to create, manage, and optimize data-driven digital advertising campaigns in a variety of ad formats and channels, including display, video, audio, in-app, native, and social, and on a variety of devices, including computers, mobile devices, and connected TV. Number 8, Target Corporation. Target is one of the most well-known big-box department store businesses in the United States. Target is well-positioned to meet and exceed consumer needs, with something in the neighborhood of 1,897 locations. Target's sales and earnings grew at an exponential rate during the pandemic. Target, which was considered a necessary retailer, remained open and increased its market share. Despite its position as an industry leader, Target stock hasn't performed well in recent years. After peaking in November of last year, shares have dropped 22.4% due to supply chain worries and fears of revenue being pulled ahead by the epidemic. Number 7, ASML Holding NV, ASML. Peter Thiel, a billionaire investor who founded PayPal Holdings Inc. (PYPL) and was an early investor in the firm formerly known as Facebook Inc. (FB), is well known for his dislike of competition. According to this viewpoint, firms and investors should seek for a monopoly-like situation, and ASML, a technological corporation based in the Netherlands with a market capitalization of almost $320 billion, has one of the most valuable. ASML is the only company in the world that makes extreme ultraviolet EUV lithography machines, which are used by semiconductor foundries and big chip makers to build the world's most powerful processors. ASML is the company that is keeping the trend of ever smaller, denser, and more power-efficient chips alive at the highest levels. Number 6, Advanced Micro Devices, Incorporated. AMD, Advanced Micro Devices, is a multinational semiconductor business specializing in computing and graphics cards. AMD's technologies have proven crucial in a world where semiconductors are increasingly used to power everything from video games to automobiles. AMD is one of the greatest stocks to buy right now due to the increased demand for semiconductors. For starters, AMD wants to eat into Intel's market share, which is presently the world's largest semiconductor business by revenue. Analysts predict AMD's revenue in 2021 to climb 65% year over year to $16.1 billion, as the company's earnings release approaches. Number 5, Medifast Inc., MED. Medifast, a multi-level marketing firm that manufactures, distributes, and sells weight loss foods, is next on the list of top stocks to buy in 2022. Medifast, a repeat pick from the 2020 list, when shares returned an impressive 86%, is once again undervalued after virtually trading sideways in 2021. Despite an enviable year of growth that saw revenue rise 52% last quarter, Medifast shares trade for less than 15 times earnings, indicating a growth at a reasonable price opportunity, with analysts forecasting annual earnings growth of 20% over the next 5 years. Number 4. Walt Disney Company. Disney has already carved out a sizable foothold in a number of today's most lucrative businesses. With theme parks and intellectual property in practically every country on the earth, Disney's market worth of $259.6 billion appears to be modest, on name value alone. You might argue that the Walt Disney Company is one of the best stocks to buy right now. Disney has been one of the best performing stocks on the market for the better part of a decade, and there's no reason to believe that trend will change. Do not be fooled by the fact that Disney has grown at a triple-digit rate over the last 10 years. It is one of the greatest companies to buy now. Number 3. Upstart Holdings Inc. UPST. This high-risk bet is not for the faint of heart, but it has a lot of upside potential in the long run. Upstart is an artificial intelligence-driven disruptor in the credit scoring sector, which has long been dominated by the FICO score from Fair Isaac Corp. FICO. Upstart makes some bold promises, claiming that lenders that use its technology report a 75% reduction in loan defaults. Upstart's technology is also proving to be useful, with bank collaborations increasing from 10 at the time of its December 2020 IPO to 31 by the time of its November earnings call. The addressable market for Upstart is likewise rapidly expanding. What started with personal loans is now growing into the much larger vehicle loan sector, with larger fish like mortgages expected to follow in the near future. Number 2. Meta Platforms Inc. FB. Economic conditions may change over time. Geopolitical conflicts may arise, and an unanticipated pandemic may appear. However, one thing never changes: human nature. The corporation formerly known as Facebook, Meta Platforms, is a bet on the ego. On a monthly basis, 3.58 billion individuals use one of the company's services, which include Facebook, Instagram, WhatsApp, and Messenger, which equates to roughly half of the world's population, or 75% of internet users. Facebook switched to investing on the metaverse, which it will invest $10 billion in over the next year. Is the elephant in the room? Number 1. DocuSign, Incorporated. DocuSign is an e-signature and related cloud-based goods and services provider that allows businesses of all kinds to digitally create, sign, act on, and manage written agreements. Simply, DocuSign is appending the centuries-old physical documentation sector. Companies all across the world are using DocuSign to execute agreements in an efficient, fast, and secure manner, without the inconvenience and waste of physical paperwork. It's worth noting that DocuSign isn't one of the greatest stocks to buy right now due to its high valuation. This isn't a value investment. DocuSign, on the other hand, is regarded as costly in a business known for exorbitant values. This concludes today's video. What are your thoughts on our list? Please let us know what you think in the comments section below. Also, don't forget to like and subscribe to our YouTube channel for future updates.